All right, so here's your 2-week quick market checkup. I'm going to keep it simple, what's happened, why it matters, and what I'm watching next so you don't have to live on the news. So first are rates. Freddie Mac's weekly survey is the cleanest national average snapshot that we've got. So February 26th, the 30-year fix was at around 5.98%, and the 15-year was at about 5.44%. By March 5th, the 30-year fix was at 6% and the 15-year at 5.43%. So the big story is these rates are not accounting for the drastic rise in the rates that we've had since March 2nd, the day that the market opened after the start of the bombings in Iran. So this will get updated this Thursday at noon, and I anticipate this jump to be quite a bit. Now, this is a great reminder to those who are thinking about refinancing to get your applications in and get your file ready so that you can take advantage of the rate windows when they're available. They seem to just really come and go so quickly. So get in, get your apps in, get your file set up so that way you can lock the rate on a shorter term. It'll be cheaper for you that way. And check out what kind of incentives your lender has. You can always reach out to me if you have questions on that too, but reach out and get that work done now. That way you can be all set, and you're probably going to refinance again by 2030 if you plan to stay in your house. So as always though, obviously your rate is dependent on your credit, your down payment, if you're doing a purchase, your loan type, and points. All this stuff, it changes based on how you have it set up. So, check in on that. So the next thing we want to talk about is your housing. So the biggest real estate headline is that the existing home sales bumped up 1.7% in February. So buyers are really getting off the bench a little bit as the rates stopped jumping around. So then the median price was around $398,000 and inventory is actually still pretty tight. So why does this matter? Well, when rates feel less chaotic, people make decisions again. And it doesn't mean it's suddenly easy. It just means that there are fewer people frozen in place. Now, the stuff that really pushes mortgage rates around is inflation, which February inflation came in around 2.4%, with the core around 2.5%. Now, that's still above the Fed's 2% goal, but it's not screaming higher. But jobs, on the other hand, the February jobs report was weaker than expected. Payrolls fell by 92,000 jobs, and unemployment ticked up to 4.4%. None of that's really all that good. So when jobs cool, the markets sometimes assume that the Fed could cut rates sooner, but that really all depends on inflation. And when you add in this war that's going on in Iran, that doesn't help our inflation picture at all. So if we put this all together, if inflation stays calm and jobs continue to cool, that can actually take pressure off of rates. But if inflation heats back up, rates can actually then get stubborn and stay in place or even go up. Some countries around the world are actually talking about rate increases right now. One big wild card is energy prices. So obviously, again, this war with Iran is kind of a big deal with the oil and everything with the Strait Hormuz and all that. So there's been a lot of volatility tied to Iran and the conflict and concerns about these shipping lanes. So when oil jumps, it can actually push prices on everything and everywhere higher, and that can also leak into inflation, higher prices with gas and all that kind of stuff. So your simple takeaway is energy is like a hidden tax. If it spikes, everything gets a little bit more expensive, and the markets then pay attention. So rates will jump with that kind of thing. Bottom line, when we saw rates steady near or below 6%, buyers showed up a little bit more with a little bit more life in February, and the next move depends on whether this inflation can stay calm or whether energy prices behave how we want them to. Now, if you want, message me and I'll run numbers for you when it comes to buying, selling, or refinancing. You can check in with me what kind of special programs we have for refinancing, or even if you just want to do something like, what's my payment going to be if we did this? Obviously, no pressure, just something that can help you to get you some answers and get you some numbers that makes it a little bit more real and concrete. So feel free to drop any questions below if you're seeing this online, and I'll talk to you on the next one.